Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to break-even analysis used within a projection. Get ready. It's time to take your chance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to put that into the blue area into our worksheet on the right-hand side. We also have two tabs down below. As you can see, you may have 4 tabs in your practice problem if you're working along with this. 2 being the answer tabs, 2 being the practice worksheets that will look something like this, something like that. They'll be similar in format. We're going to be working similar problems in format for them. So the first area on the left-hand side, we're going to have our break-even analysis as we have seen in the past. Then we're going to do our projections and see how we can start to think about this in terms of thinking into the future of what may happen into the future. First will be a plan to reduce the fixed costs to 210,000. So someone's going to propose a plan then that's going to say, hey, the fixed costs are at 250,000. We're going to propose something to reduce them to 210,000. However, in doing so, we're also going to have to increase the variable costs by $47 from the $40 that we started with. So we're going to run the initial scenario, and then we're going to be breaking out the difference in someone's plan that they may have to basically this plan, right? Reduce the fixed costs. They're going to do something to reduce the fixed costs. If we buy less machinery, for example, or rent less space maybe, then we can reduce the fixed costs, but it would take us more in terms of the variable cost per unit in order to do so. Would that be a wise plan? And then we'll do another scenario in the second practice problem. Okay, so we'll do the break even a little bit faster. So remember, we're first thing we're going to think about is that point at which we're going to break even in terms of units. How many units do we have to produce? That's going to often be our starting point when we think about projections into the future. Also note that you want your information for your projections basically on the right-hand side so that you can then fix or look at different ideas into the future by just adjusting these numbers in your projection as opposed to adjusting hard-coded numbers which are in your tables. That's the point of the projection. That's the point of Excel. That's the beauty of Excel or Google Sheets, whichever one you're using. So we have the fixed costs. We're going to be picking up the contribution margin in units. Contribution margin per unit is going to be the sales price in units, and then the variable costs comparison. So we'll pull that in the inside. We're going to say the sales price is $75 per unit, and the cost is going to be $40. Those costs that change along with the unit production. I'm going to put an underline here, Home tab font group underline. That's going to give us our contribution margin. So I'm going to say contribution margin, but I'm going to delete the little colon at the end because this is the total here. And we will then subtract those out. So they cost $75 per unit. Variable cost $40 per unit. We're keeping $35 per unit after the variable costs. Let's do some formatting, selecting these 3 cells. Home tab, alignment, increase the indenting. Put our cursor on this cell. Home tab, alignment, increase the indenting here. That's going to give us our break-even point in units. Break-even point in units then being equal to the 250,000 fixed cost, like the rent of the facilities, let's say, divided by the 35 contribution margin. That means we've got to produce 7,143 units in order to break even. Let's put the double underline here, underline there, double underline here. Now let's run our projection here, and then we'll calculate the net income just to prove this on terms of the net income and practice our formatting down there as well. So what if we were just going to take the break-even point and say, let's take a look at this plan. Someone's saying, hey, look, you don't have to pay the rent on so much of the space. You can rent less space here. We'll bring down the fixed cost from 250 down to 210. But in order to do so, we have to increase the variable costs, which are going to be from $40 to now $47. So variable costs are going to be increasing in order for us then to reduce some of these fixed costs. So that's going to be our trade-off. Well, how would we know whether or not that would be a good thing? So we can go over here and say, well, let's take a look at our break-even analysis and say that if we do the same thing, I'm going to say fixed costs are now going to be equal to the 210,000. And then, and just note that, like, the easy way to do this, right, it would be basically for me to just simply change these numbers in this set of scenario, right? I could basically copy this tab over. I'm going to hold down Control and then left click on this tab and drag it over, right? And if I just change these numbers, if I say, oh, okay, now I'm just going to make this 210,000 and I'm going to make this 47, and there we have it, right? It'll change for us automatically in the worksheet if we change Excel. But I want to do it side by side here, but just note that's the point of having the Excel worksheet. You want to make sure you have formulas to be able to do something like that. I'm going to delete this tab now, right-clicking on it and deleting it. It's going to permanently delete it. I'm going to say yes, permanently delete it forever and all time. So then we're gonna be picking up the contribution margin per unit, same name. It's going to be the sales price, the variable cost, the contribution margin, break even. We can even copy the formatting by selecting these and then go to the Home tab, Clipboard Format Painter. And I'm just going to paint the formatting here on this whole thing. There we go. And then we'll just pick up our numbers, which are going to be equal now to the 75 price. It didn't change. What did change is the variable cost went up from 40 to 47. That means our contribution margin per unit now is now 75 minus the 47. That's going to be at the 28 as opposed to the 35. Multiplying or dividing this out, it's going to be 210 divided by the 28. Now, we would need to make 7,500 units. Let's go ahead and underline here, Home tab, Font Group, underline, and underline here, Home tab, Font Group, underline, double underline here, Home tab, Font Group, drop down, double D, underline. Okay, so there we have it. So now it looks like we have to make more units under the new scenario, which would be an indication that it's not a good idea. So we probably keep with the first scenario. Let's just go ahead and prove this with our net income calculation for both, just so we can see what it will look like in terms of an income statement calculation on a contribution margin income statement, sales minus variable costs, as opposed to sales minus cost of goods sold, breaking this thing out by behavior as opposed to by what it is used for. So we're going to say the sales. We're going to be picking up the unit price, sales price per unit, and then the number of units that we're going to sell, which will be units sold, and that's going to be then the unit price, 75 units we're going to sell. This scenario is going to be the 7,143. That's going to be our sales amount. I'm going to put in the outer column equals 75 times the 7,143. Gonna go ahead and indent these, selecting these three, Home tab, font or alignment, increase the indenting, sales, Home tab, alignment, increase the indenting. Then we're gonna go to the variable costs. Variable costs, now we're gonna say the variable cost per unit, and then we're gonna take the units sold. That's gonna give us our variable costs. Let's go ahead and indent these now. I'm going to select those three. Home tab, alignment, increase indenting. This one, Home tab, alignment, increase indenting. We're going to be picking up the variable costs, which will be 40. 40 up top. Then we're going to take the units that are going to be sold, which is going to be our break-even units. Then we'll multiply these out. This will be equal to the $40 times the 7,143. Then we're going to be saying we have our contribution margin. Contribution margin. So notice what we do not have, sales minus cost of goods sold, but rather sales minus variable costs equals contribution margin. Sales minus the variable costs, 250. Let's do some formatting. Home tab, font group. Let's put an underline here. Let's put an underline there. Home tab, font, underline. Let's put an underline here. Home tab, font group, underline. That looks much better. Very, very nice. Fixed costs then are going to be equal to that same 250. That's what the fixed costs are. Underline here, Home tab, font group, underline. That's going to give us our net income. Net income equals the 250 minus the 250. Okay, let's do the same thing over here for the break even. We'll see if we can copy our formatting for the other one here and just pull it over. We're going to say this is going to be equal to the sales. I'm going to pull that down. Now note there's a couple ways you could do this, obviously. You could take this whole thing, copy it, go over here. Now you can't paste it just normal because there's formulas involved. But you could paste it 1, 2, 3, the values only. And then you could format it. Then you can right click and format paint it. I want to paste the format or I'll do it this way, the Format Painter. Home tab, clipboard, Format Painter, Format Paint. One way you can do it. Or you can do it this way. Say this will be equal to, and just pull it over in a formula. Auto-fill that down, or use the fill handle, drag that down. And then once again, we could format paint it, selecting these items. I'm going to select the whole thing now, because I want the underlines to be formatted as well. And then go to the Home tab, Clipboard, Format Painter, just format paint that entire thing. Then we'll pull in the numbers. We're going to take the sales price per unit, and then we're going to take the units sold, now 7,500, multiplying that out, that being 75 times the 7,500. Then we got the variable costs, which are going to be equal to the $40. So we'll pick up the $40, and actually this isn't $40 now, this is the $47, The units we're going to sell is going to be that 7,500. This is going to be equal to the 47 times the 7,500 units. Contribution margin will be equal to the total sales minus the total variable costs. Then we're going to be picking up the fixed costs, which are now at the 210,000, to show once again we're at that break-even point, subtracting those out. I'm going to select this item, hold down Control, and this one, go to the Home tab, Font Group, drop down, double underline here. So we could see, basically the evidence of these two rather than just looking at the break even, right? So sales are going to need to be higher due to the fact that even though the sales price is the same, we're going to need those more units to be sold. The variable costs here are going to be higher because, of course, we had the 47 at the variable cost as opposed to the 40, and we're going to need to have more units that will be sold, and that's going to give us a contribution margin that is lower, even though the sales number is higher, right? Sales has been increased, but the contribution margin is lower due to the increase in the variable cost, due to the variable cost per units being 47 as opposed to 40 now. So then we're going to have the contribution margin at 210 versus the 250 at that point, and then we'd have the lower fixed cost, which was the trade-off between having the greater variable cost versus this fixed cost, and there's our break even. So of course, in order to achieve this second scenario, we would need to sell more units, which you would think then we would stick, you would think, with the first scenario. Let's break this out again. Let's do another one slightly different, same kind of process, slightly different scenario. So we have the beginning scenario again we will work with here. Then we're assuming we're going to purchase new equipment. Now, the new equipment is a little bit tricky of a calculation because we could take into consider time value of money, what's going to happen in the future, how long are we going to have the equipment, and whatnot in that kind of decision making as well. But we can add that in terms of a break even as kind of like our starting point as to whether or not this is going to be a good idea. So if we say we're going to purchase equipment for $330,000, and then we're going to say, well, possibly that will increase the fixed costs. Why? Because we're not talking about cash in the fixed costs here per se. We're talking about the depreciation of the equipment. So we put it on the books as an asset, whether we pay cash for it or not, under an accrual basis of accounting, and then we're going to allocate that cost to the periods in which it will be used. So we're going to say then that would increase, we're going to assume then the fixed cost, mainly we would think by the depreciation. So, and note, again, once we do a breakout like this, we got to realize that there's a timing difference and there's time value of money that will be involved, meaning if we put the money down up front, then obviously we put the money down up front and it's going to have a benefit for multiple years into the future, meaning we're going to be allocating the costs to multiple years in the future, and there's going to be risks associated with the investment up top. Also, if we took out a loan for it, then if we finance part of it, we might have interest that would be involved in it, which we can be including in possibly our fixed cost as well for the financing charges. But once again, we'd want to take into account the time value of money. So this is one kind of component we might do to help us to analyze whether or not we should purchase new equipment. So here's going to be our baseline number. We say, hey, if we purchase this new equipment, it's going to increase the fixed cost due to probably depreciation and or interests, but the variable costs then will be decreased at this point. And this is kind of a common scenario because you would say, if we're doing something that's labor intensive, maybe we can buy something like software or something like that, which would automate certain things that are labor intensive, costing an initial investment that would be high maybe, and then maybe reduce the fixed costs if we wouldn't need as much of the labor at that point. So there's one way that we can start to analyze this kind of scenario. So first scenario, we're going to pick up the fixed costs. Fixed costs are going to be at the 160. We're going to take a look at the contribution margin. The contribution margin is going to be per unit is going to be the sales price at the $10 and the variable cost at the 4.75. That's going to give us our contribution margin per unit. I'm going to get rid of the colon over here. So then we're going to say that this is going to be the $10, the unit sales price, the variable cost where we started at, and I'm going to add a decimal here, or two, home tab, font group, or numbers group, add decimals. Then we'll go on down and say this will be equal to the $10 minus the 4.75. Let's add some decimals here. Home tab, numbers, increase in a few decimals. Let's put an underline here. Home tab, font group, drop down, underline. That's going to give us our break-even point in units. Break-even point in units is going to be equal to the 160,000 divided by contribution margin, giving us about the 30,476. Home tab, font group, and then underline. See if it's even. So notice it's not quite even, but this is an estimate, so it's about 30,476. So then let's just go to the break even first, and then we'll go ahead and format our net income just to prove this here. So we're going to say, all right, well, what would happen if fixed costs? Let's pick up the fixed costs. Let's do some formatting first. Let's select these three. Home tab, alignment, increase indenting. Select this item, home tab, alignment, increase indenting. Then I'm going to say this equals the fixed costs. I'm going to copy that down using the autofill handle. Put our cursor on autofill, drag that down. Then I'm going to copy the formatting, selecting these items, home tab, clipboard, format painter, and then click in here and format painting those items. Now I'll just pick up the new numbers. So now we're going to say if we make the change, we're going to have the 200,000 higher fixed cost. However, the variable costs now will change. We're still going to be selling them for $10, but the variable costs will now be $3 as opposed to the $4.75. Subtracting that out, the 10 minus the 3, we get a $7 contribution margin per unit. 200,000 divided by the $7 is going to be the 28,571. So it does look, I'm going to go ahead and I'm going to format paint the underlines here. So I'm going to select these, home tab, clipboard, format painter, and then select these. That'll add the decimals and the underlines. So it does look, and let's put an underline here, home tab, font group, underline. Let's put one here, home tab, font group, underline. So it does look like we would have a lower break-even point if we did this. So then we might dig further into this. This would probably be one calculation we would take a look at. Then we might take a look at whether or not we need to finance it. We might take a look at how long the equipment is going to be expected to last, and then do like a time value of money type of calculation, because this will be a long-term asset, a long-term investment that we'll be considering. So notice, again, we're including in the fixed cost kind of like the allocation of the depreciation, most likely, which is taking into consideration some future benefit because we're allocating the cost, but we're not really taking into consideration time value of money, or possibly alternatives we can do with an initial investment if we had $330,000 to put down somewhere. So we might be doing other comparison analysis, but this definitely works within the picture of an analysis such as a purchase of property, plant, and equipment, if it was to lower the costs here. So all right, let's do our net income calculation just to practice the formatting. We'll do this quickly here. We're going to say that we have these sales. We've got the sales per unit. Sales per unit is going to be the $10. And then we've got the units sold. Units sold, which is going to be our break-even units because we're proving the break-even units. And that's going to give us our total sales. So total sales are going to be equal to the $10 times the 30,476. Let's go ahead and format this now. Selecting these items. Home tab, alignment, increase the indenting. Sales, home tab, alignment, increase the indenting. Then we're going to move on to the variable costs. So we'll pick up the variable costs where we will have the variable cost per unit. And then we're going to be picking up the units sold, and that's going to give us our variable costs. And let's pick those up. We're going to say the unit cost is going to be starting out point, the 4.75. We're going to adjust that for the decimals. Home tab, numbers, increase the decimals. We're going to pick up the units, which is going to be our break-in units up top, break-even units. Put an underline here, home tab, font group, underline. And then we're going to have our variable cost total being the 4.75 times the 30,476. There we have that. And then we're going to pick up we're going to get to our contribution margin, which is going to be equal to the total sales minus the total variable cost. Let's put an underline up top here, home tab, font group, and underline. And then we have the fixed costs. Fixed costs are going to be equal to, starting out, the 160,000, which is why we are at a net income of 0, which is the 160,000 minus the 160,000, because we broke even. Home tab, font group, underline, and home tab, font group, and underline. We'll do the same thing over here. I'll do it more quickly. We're going to say this is going to be equal to the sales. I'm going to autofill that down using the autofill handle, dragging it down. We're going to then format it. So I'm going to format this whole thing. I'm going to select this whole thing. Go to the Home tab, Clipboard Format Painter, and then select this whole thing. And now it's formatted. Even the numbers are formatted before we even put them in there. And then we're going to say the sale. Oh, wait a sec. We didn't format over here, though. These should be formatted. Let's go ahead and select these three. Home tab, alignment, indent, and do this one. Home tab, alignment, indent. There, that's much nicer. All right, then we can do that formatting painting thing again. Home tab, clipboard, format painter. Select the whole thing. Oh, that's so much better. Okay, so then this is going to be equal to the 10. And now the units we're going to sell are the 28,571 to prove this break even thing. So we're going to say this is the 10 minus the 28,571. We can underline here, home tab, font group, and underline. We could take the variable costs then are now going to be equal to the $3 instead of the $4.75. And this is going to be then the same units sold. Multiplying that out, we'll pick the $3 times the 28,571. Contribution margin then being the sales times the total variable costs. And that's going to be equal to the fixed cost now because it's the break-even point that we're calculating here. Therefore, the 200,000 minus the 200,000 is indeed 0. Now, note okay, so you might have been able to do this a little bit faster, just so you know. We could have, if I delete this whole thing, you could try to copy this whole thing over or use absolute references if you wanted multiple kind of scenarios in this way. So, for example, I don't want that 10 to move if I was to copy it over. So I could say F4 on that one. And here I could say that one I do want to move, and this one, if I was going to keep that number, I wouldn't want it to move. So I'd say F4, but I'm going to have to change that to the 3 down here. Number of units, I do want that one to move. And the fixed costs, I wouldn't want that, so I can F4 that one. And then you can copy these whole numbers over and try to copy it over. And then just fix the ones that you need to fix, right? The 10, that's good. Sales, that's good. Variable costs, wrong one. We need the $3. Okay, that's why we're off by the 10,000. That's why that's not 0. So I'm going to say, all right, I need this $3 one over here. And now we're still off by the 40,000. So let's see what that is. That's because this item down here, wrong fixed costs, which should be this one. That's what's wrong. So I'm going to delete that and say that this is going to be equal to the 200,000. And that might be a little bit, faster to work these multiple scenario types of calculations.